Hello, everybody. Welcome back to the Contrarian. My next guest is the portfolio manager of Stanphyl Capital, which is a New York-based equity investment firm. Most notably, he's one of only a few short sellers left on Tesla after a few painful years. And Lord Mark Spiegel, thank you for joining me today.
Thank you. I'm very pleased to be on with the second most famous Logan on YouTube. So, yeah.
Okay, well, Mark, I really wanted to get started just by getting sort of your macroeconomic perspective of where we are right now in terms of just bubbles everywhere. I want to kind of get your thoughts from kind of a 30,000-foot view of where we are in terms of the stock market and the economy, et cetera.
Sure. Let me just, by the way, tell your viewers that, we're recording this. It's Monday at 4:30 p.m. in New York. And so there's still things going on market-wise. So if my eyes dart around a little bit, I'm just glancing at what's going on after hours here, if there's some news or some price action or whatever. So just explain that. Yeah, you said it. This is the biggest bubble, probably ever. I mean, in my lifetime. I mean, it's bigger than the 99 bubble because this is an everything bubble, right? In 99, the internet stocks were a bubble, but this is just everything is crazy priced. And what I think is going to happen, and look, I could be wrong, this is what I'm positioned for, is that inflation will continue to get out of control because we have a big spending government. It was big spending under Trump. It's even bigger spending under the Biden Democrats. And we have a Fed which is going to be way behind the curve because if it raised interest rates to where they should be, instead of spending $400 billion a year or whatever we spend to finance the deficit, we'd be spending well over $1 trillion a year. It'll be the biggest line in the budget, and we can't afford to do that. So I think inflation is going to rage out of control until the whole system eventually, one way or another, blows up. So my thoughts there, I own a lot of gold. I'm short a lot of very, very high PE stocks. The reason for that is if you look at what happened in the 1970s, when inflation really took off, you had massive PE multiple compression. So, if we've got a market selling now in the 20s, it could be wind up selling in the mid-teens or worse as a multiple. And like the really crazy stuff, I mean, the ARK stocks or I don't know what Tesla is anymore. It's not a share in a company, but that kind of stuff, that's what's going to get slammed the worst. And then of course, what happens is once those PE ratios come all the way down to account for a higher rate of inflation, then you want to get long stocks because inflation will be a tailwind in terms of nominal earnings, nominal revenue. But the trick is going to be first to not get caught long bubble stocks when people actually realize like, hey, this inflation, this is a problem. I mean, short-term inflation expectations have climbed considerably, but the longer-term ones, like the 5-year expectations, are still kind of moderate. They're still like in the high twos. If those move to 6%, 5%, this high PE multiple stuff is going to have problems.
Absolutely. Yeah, I was definitely going to ask you about all of what you just touched on later on. So you would almost...
We covered it all now. So.
Yeah, exactly. I definitely want to talk in more detail, but you would almost take a very value-oriented approach right now, it sounds like, whereas Cathie Wood is definitely going the opposite of just looking at growth, or I don't even really know what...
Cathie Wood is just full of shit. She comes up with bullshit models. People call her out on the models. She doesn't change the price target. She just changes the multiples in the models to justify her nonsense. I mean, I think she's vile. And, she's just a double book. She'll probably walk away with a pile of money from her fees on that stuff. But I think anybody in that fund is going to wind up getting burned. They made a lot of money, but, this year it's flat and it's way off its high. But so look, I'm always a value investor. I mean, that just means paying what I think is a cheap price for something. It doesn't have to be a PE multiple of 8. Although I just recently bought in the last month or two, I bought General Motors and Volkswagen. There's obvious paired trades against my Tesla short. We could talk about them. They're just cheap. And they have They have EVs that are every bit as good as anything Tesla has. GM's aren't out, the good ones are not out in the market yet, but they'll be out over the next 6 to 12 months. And VW has Porsches and Audis that are great EVs now, and even the Volkswagen new EV is a good car. So anyway, but there's very little value out there to buy. I mean, those are the only two long. My preference is to buy deep value micro cap and nano cap, where there's very little competition from big funds. And I haven't been able to add one of those stocks. I don't think maybe since the crash in March of 20. I don't know if I bought a bunch of them then, and they were all home runs for us, and I sold them. But right now it's very little value out there. But these autos to me are value because they've been abandoned, because everybody thinks, oh, they're not everybody, but people think, oh, they're dinosaurs, right? Well, Volkswagen sells more electric cars in Europe than Tesla, right? That by the end of this year, they're going to be at about 2/3 of Tesla's electric car sales rate in China. And besides that, they also sell 9 million other cars a year, or more actually. So, I mean, to me, they're just, I don't know that GM and Volkswagen are going to soar. I think they can come up somewhat, but it just shows you what a ridiculous bubble Tesla is. So I'm long them. We'll either make money on them, or they'll be a little flat. We'll make a little on them, but I think we'll eventually make money on Tesla. But God knows when. I mean, it was up more than a General Motors just today. Tesla's now selling for more than 17 times the price of General Motors. And I'm looking at it now, and after hours, it's up another $13, which is not $13, it's over $14 billion after hours. So it's crazy. And I'm looking, I don't see any news. A lot of idiots are out there thinking, oh, it's going to split again, we should buy it. You try to explain to these people what a stock split means, which is, you're just cutting the pizza into more slices, but you have the same amount of pizza. I don't think they know what that means, or they don't even care. So, it is what it is. Eventually it'll work.
Yeah, I was going to ask at this point, I guess, what is your fundamental short thesis? Because what is preventing, say, Tesla from just becoming, say, a $2 trillion or $3 trillion market cap?
Well, I mean, here's the thing. I mean, Tesla is Bitcoin. I mean, in my letter this month, I basically posted a long-term chart. It's like going back 4 years of Bitcoin versus Tesla, and they just move not daily lockstep, but sort of on a multi-week basis. They just move lockstep. So, I mean, traditionally, a company with this kind of market cap, I mean, a company with a market cap over 50 or 60 or 80 billion would never trade like this. I mean, and you would have a bunch of institutional investors in there, and when it would spike, they would sell. But I think the only people left in Tesla now are, of any size, are like crazy cult members, like apparently, Ron Barron has turned into, although his percentage ownership isn't that much. That guy in Singapore they talked about over the weekend, if you saw those articles, who apparently bought a bunch of this because he loves Elon Musk and he's made billions on it on paper. And the S&P, and then you have a couple institutions that still had some. They're probably bleeding some out. Bailey Gifford had some left. I think Capital Research, or I don't know what they call themselves now. It used to be Capital something out in California was a holder. But these people, I mean, there's no facts behind these people. I mean, what's amazing to me is how many of them will say Tesla's years ahead of everybody. They've never even gotten behind the wheel of a Taycan. This clown who writes for Barron's, Al Root covers Tesla for Barron's. He reached out to me over the weekend. I gave him some information. And he said, he wrote a column today. He happened to mention me in it, but he said, I drove a Taycan. It's a really amazing car, but it's not an existential threat to Tesla. What he doesn't get is, it's not any one car that's the quote unquote Tesla killer. In Q3, last quarter, the one they just reported that everyone was so excited about, Tesla's electric car market share in China was only 11%. It had plunged to 11%. It plunged in Europe. It's been 15%, stuck there. It was over 30% a couple of years ago. I mean, and by the way, that's the electric car market share, okay? Tesla's overall market share in China was 1.5% because because EVs are, you know, a little more than a tenth of the market there. And I don't know what the Europe share was, but worldwide Tesla's market share is about 1.1%. But it's valued like, you know, the entire rest of the industry together or something like that. So to answer your question, yeah, it could go to 2 trillion or 3 trillion. It won't be on fundamentals. I mean, there's no fundamental justification for this company past, I don't know, 40 or 50 billion. So, and that's a big, generous number. So, yeah, I don't know. I mean, I can tell you this, if anybody looks at technicals out there, the RSI, the 14-day RSI on this thing is just crazy. It's 3 full days over 90. The only time I've seen that before, I saw it in GameStop, and a few weeks later, it was down like 70% or something like that. I've seen it in Bitcoin. That's the only other thing I've seen it in for more than 3 days, for 5 days, and it was down 30%, you know, a few weeks after that. Then it started rallying back again. So on a short-term basis, it's way overbought. I mean, I expect it to heavily correct in the next day or two, if not tomorrow. Today's Monday when we're talking, if not Tuesday, then maybe Wednesday. But you know, beyond that, I mean, it's all just driven apparently by call option buyers who leverage up. Then they take the profits from their call options and they buy stock, or they buy more call options, or whatever they do. I mean, you know, obviously these options are not priced expensively enough, right? Or this wouldn't be happening. But yeah, you know, fundamentally it's a joke. Beyond that, I can't tell you.
Yeah, you just touched on a major thing I wanted to ask you about, and that is could you maybe talk about what happened earlier this year with regards to Archegos Capital blowing up and the whole gamma squeeze that's just been going on with Tesla? I don't think that's, obviously the mainstream media doesn't really talk about that at all.
Well, I mean, all I know about Archegos, Bill Huang, is what I read in the same things you read. I read in the Journal or on Bloomberg or whatever. Sorry, I just got distracted by some news here. And basically, apparently, this guy just destroyed some very legitimate short sellers in like that. What was that Chinese education company, GSX or something like that? Anyway,
something like
just by buying tons and tons of call options, which drives up the price of the stock, because when the option seller, you know, like usually Susquehanna or Citadel typically, you know, when they sell you a call option, they don't do that naked. They have to hedge. So if you're selling somebody a call option, how do you hedge? You go into the market, you buy the stock, you know, and it's not 1 for 1. I assume it's some sort of dynamic hedging where, you know, they more or less stock they buy depending on how close it is to the strike price. But that's how these things got driven up. That's what's been going on with Tesla also. So, and by the way, Bill Huang staked Cathie Wood's fund, and all of Cathie Wood's outperformance was when Bill Huang was doing all this crazy stuff. Is there a connection there? I don't know. Maybe we'll find out. You know, maybe Bill Huang, you know, cops a plea and we hear something. I have no idea, but it would not surprise me. Let me put it that way. You know.
Yeah, for sure. And I guess that you are not buying the whole tech company story behind Tesla.
I mean, 95% of their money comes from selling cars.
Yeah.
Okay. I mean, that's 95% of their revenue is cars. Their margins are complete and total bullshit if you put them. Am I allowed to say that? I saw you're a religious guy.
Yeah, I won't say that myself, but I will still put it on YouTube.
Listen, you get me on your show, you get the cursing. I'm sorry. But anyway, so yeah, I mean, their margins are nonsense. Because for one thing, they way under reserve for warranty work, and that adds points to the gross margins, and it's obvious what they're doing for future warranty reserve. And then, you know, they don't include engineering and research and development in their gross margin. They put that all below the line. So that's not going to inflate profits, but it inflates gross margin. Every other automaker, you know, Mercedes spends $1 billion to design the new EQS electric car. That comes out of gross margin. They actually capitalize that billion and depreciate it as they sell the cars. So Tesla doesn't do that. Tesla just puts it all, you know, below the gross margin line. So the point is, Tesla's real gross margins are nothing all that interesting. They're like any other car company. So to say that they're a tech company, I mean, listen, there's a hell of a lot of chips in a turbocharged V8 engine today to make it emissions compliant, and it's incredibly precision machined to get those cylinders right, and to get everything to work together. There's probably more tech in an ICE car than in an electric car. I mean, people talk about, oh, the electric car is so simple. It's so simple. Well, you can't have it both ways. It's either simple or it takes incredible tech, right? As we learn, it doesn't take incredible tech. I mean, the new Hyundai Ioniq 5, the Kia EV6, these are all cars, they're a league beyond Tesla in electric cars. They have 800-volt platforms. They charge faster than Tesla. Tesla has a 400-volt platform. So, it's not to call it a tech company, it's no more a tech company than any other car company.
Yeah.
Their software interface, and their software interface is good, but there's a great new software interface on the Mercedes electric cars and on the new BMW electric cars, the iX, which is their SUV, which is going to be out in a couple of months, which got amazing reviews. Very few people test drive like the cutting edge, ground up designed electric cars that are now out there. I'm talking about the models that have come out recently and are coming out the next few months, and then go ahead and decide to buy a Tesla instead. Just doesn't happen. I mean, these people who brag about Tesla, they've never driven a Porsche Taycan, okay? The one advantage they always cite with Tesla is, well, the superchargers. Well, today, because there are other charging networks being developed, but they're not quite there yet, like Ionity in Europe and Electrify America here. But today, Tesla said it's going to be opening up its superchargers for everybody. So that's like the last alleged moat. It's coming down. And they're doing that, by the way, not out of the goodness of Musk's heart, but in order to get government subsidies, you're not allowed to have a closed off charging network. So he's going to have to do it. So at that point, nobody's going to be able to say, yeah, I like the electric BMW better, but I take a lot of road trips and I need those superchargers. Well, you can have both. So it's going to be another problem for them.
So yeah, you could almost put it as like a first mover disadvantage almost, because not only is Tesla getting consumers more used to electric vehicles, but also it seems like they're running through the federal subsidies more quickly. And kind of what you just mentioned in terms of startups or just existing automakers being able to enter the space, it seems like they're very quickly being able to do that.
Well, the federal subsidies may be coming back, unfortunately. And look, it'll help me too, because I own GM and VW, but it's just the most ridiculous waste of taxpayer money ever. I mean, if you look at the contribution of cars to man-made CO2, and then you look at spending $12,000 on each car, and they're only marginally better than a hybrid. We should be subsidizing hybrids for $1,000 instead of an electric car for $12,000. It's absurd. Anyway, so the subsidies, they may get those subsidies back. We'll find out in some form. Manchin's throwing another fit today, but eventually he's going to come around and something will get done there. So.
Yeah. I'm guessing you also, I'm just going to throw out here a common argument that I hear Tesla bulls oftentimes use, and I'm guessing you're going to say that this is impossible, but just with the whole growth story, it's just not really possible for it to grow into the valuation that it's currently at. Well,
first of all, Tesla bulls and sell side Wall Street, I'll say hoes because that's not as bad a word for you. They love to talk about percentage sales gains off a small base, but Tesla's at the point now, if they're going to have these guys are talking about Tesla selling, 20 million cars a year, these insane numbers, right? I mean, they only sold 40,000 more cars last quarter than the quarter before, right? This quarter now, they might sell, 15,000 more cars or whatever. You don't get to 5 million at that pace in anybody's lifetime, at least not my lifetime, much less 10 million or 20 million, right? And, I think Jonas and the bulls who aren't like real total, well, Jonas is just full of crap. I mean, he's got a valuation on Tesla that awards hundreds of billions of dollars to businesses that literally do not exist. But anyway, he'll say, well, they're going to sell 10 million cars a year in 2030. Well, Toyota sells 10 million cars a year now, and so does Volkswagen. Volkswagen's valued at $150 billion. Toyota's valued at $200 and something billion. You know, do you want to value Tesla at for no good reason at all at twice as much as Volkswagen for the same amount of selling 10, 12 million cars a year? That would be $300 billion in 2030, right? Because that's what I'm talking about. Discount that back at a very conservative 12% a year. And I say very conservative because anybody who owns Tesla stock expects it to go up at least 20% a year every year, right? That's why they're like, oh, it's going to go up 50%, whatever stupid thing they think. Well, discount back 300 billion in 2030, which would be double Volkswagen's valuation for being just as big as Volkswagen at 12% a year. You come up with a price today for Tesla of something like roughly $90 a share, okay? Versus, you know, $1,216 right now after hours, right? So what is that? That would Tesla coming down like 95% or more, right? That's how much it's overvalued. So it's just insane. I don't even know if people buying this now, as I said, I think it's just, you know, there's an old expression. I think it's just a trading sardine at this point. It's just Bitcoin. I mean, the vast majority of people trading Bitcoin, it's just gambling for them. I mean, you know, if they really cared about preserving value, they'd be buying gold, which I own. Gold's obviously been disappointing, but that's because gold reacts to, you know, as I said earlier, inflation expectations, which are higher, but not high enough to get people actually pour into gold yet, right? So, you know, very few people are buying Bitcoin instead of gold. They may tell you that as their ex post facto excuse, but I don't believe it. I mean, some people, you know, millennials, maybe whatever, who don't care about gold, but like the big money, they just think they don't need to buy gold. And meanwhile, they're gambling with Bitcoin.
Yeah, I was also going to ask your thoughts on crypto, the whole crypto space. And I would guess that you were also going to say that this is just an area where we've seen a lot of this money that's been printed just flow into crypto. And obviously it has no intrinsic value. It's questionable as to whether it'll actually be worth anything in the future. And it does
Let me say first that, you know, I have no crypto positions, long or short, and I've never had one. But, you know, John Paulson a few weeks ago, the hedge fund guy made a lot of money on shorting the housing bubble. You know, he said he called Bitcoin a limited supply of nothing. And I call cryptocurrencies in general an unlimited supply of nothing because there's always another coin, right? Yeah. So, oh yeah, we're only making, you know, 22 million of this coin. Well, guess what? Someone just invented another new coin and there's 22 million of those and 22 million of those. Now look, can I say like definitively 1,000% that Bitcoin is going to go to zero? No. I mean, who knows? But I can tell you this, you know, gold has a 5,000-year history of preserving its value in all kinds of situations, all kinds of markets, all kinds of whatever. Bitcoin hasn't even been through a bear stock market yet, right? It hasn't been around long enough. My suspicion is that Bitcoin, it just trades with all the garbage stocks out there. As I told you, you can chart it next to Tesla. And when all that stuff pops, Bitcoin will go right with it. But, you know, we'll see. I mean, I don't really care. As I said, I don't have a stake there either way. But it's pretty obvious to me. I mean, somebody came up with this, with the Squid Game coin, and it went up, you know, whatever, thousands of %, and then it was down today 100%, literally. Right? Yeah. So, I mean, it's, you know, and, you know, to your point as to why this is happening, yeah, I mean, it's the Fed money printing, obviously, the central banks in general money printing. There's a super smart retired hedge fund manager out of Texas. His name is John Arnold. And now he was an oil and gas trader, energy trader, and guy made a few $billion and was smart. He got out. I mean, I'm convinced that the only oil and gas hedge fund guy who walks away rich is the guy who at some point just quits, like right at the top, because otherwise the markets just destroy you. So he's a very smart guy, and now he's a full-time charitable foundation. Anyway, he had something on Twitter. I follow his Twitter account. I think it was like last March, and I'm paraphrasing. So John, if you're out there, you know, I don't pretend this is your exact quote, but it was, you know, in putting it the way I would say it, basically, the central banks have printed so much effing money that people are inventing entirely new asset classes to shove it into. And he said cryptocurrencies, he mentioned NFTs, he mentioned like sneaker collections. I think those are the three he specifically mentioned. But yeah, so what happens when they stop printing all that money? You know, which I mean, they're going to taper, right? They're going to hold rates. The reason I still own gold, despite the taper, is they're going to hold rates, I think, way below the rate of inflation forever to keep service, not forever, until it blows up, to keep financing, you know, the government deficit spending. But that doesn't mean real world rates are going to stay there. I mean, we could have 6% inflation. You know, the Fed could cap the 10-year yield at where is it now? 1.6, call it. You know, they could they could do yield curve control and say we're not going to let the 10-year get over 2% no matter what. That doesn't mean, Logan, that I'm going to lend you money for 10 years at 2%. I'm like, no, what are you, effing crazy? You know, inflation 6%. I'll lend you money at a floating rate at you know, whatever the equivalent of LIBOR is now. They have some new name, you know, plus 5%, right? Or I'll give it to you fixed at 11% for 10 years. So like real world rates and real world PEs, I think, are going to divorce themselves from however artificially low the Fed keeps government lending rates.
Okay.
And by the way, at some point it's going to have to start that QE again, because otherwise it's not going to be able to keep the rates that low. And that's, of course, what yield curve control would be the Fed doing targeted buying of bonds to hold the yield down to a certain price.
So would that almost be your ultimate kind of end game, regardless of what happens with the NHTSA investigations and Tesla, or just with all these bubbles in general, and whether it be GameStop or Bitcoin or crypto or whatever? Is that kind of how you see it all eventually winding down, as just inflation running way out of control and eventually the Fed having to tighten? And is that correct?
Well, inflation already is out of control. And what I'm saying is the Fed can stop QE for a while. I don't think the Fed can tighten, because, as I said, you know, I think now it's about $400 billion a year. We're at an average rate of like 1.5% or something, whatever it is, to finance the federal debt. What happens when that goes to 5 or 6%, and just the interest on the government debt is bigger than the defense budget or Medicare or, you know, Social Security or anything else? I mean, can't afford it. Now, eventually, you're keeping a lid on a boiling pot, and it's just going to blow up. But that's what their game is going to be. And if I'm right, and if that happens, if we get raging inflation, and if the Fed holds rates way low, that's the best situation possible for gold, because it shows the Fed is not controlling inflation. Inflation's out of control. People are going to want to own gold. So that's what I'm looking for. To your other point, you said, well, you know, it's not going to be the NHTSA for Tesla. Listen, if it's as you and I are talking, it's 3 minutes to 5. If it New York time, if at 5 o'clock the NHT today put out a press release that Tesla full self-driving is going to be banned, we're forcing them to recall it, I don't even know if the stock would react. I mean, I know it would react right now. It would be down, I don't know, $40, $50. I don't know that it wouldn't bounce higher tomorrow. I mean, temporarily. I don't think this stock is reacting to news flow at all. I mean, the Hertz deal, which is a fleet sale, you don't do a fleet sale unless, you know, you have a lot of capacity and not enough people to buy that many cars. The Hertz deal was the ostensible reason why the stock was up, whatever the hell it was up last week. I mean, last month it was up 43% or something, right? And a lot of that came in the last week and a half. But, you know, I don't know if it wouldn't have gone up without the Hertz deal like that. I mean, if you got guys just buying call options and driving it up, and, you know, the leverage, I mean, what would not surprise me is if at some point, you know, the CBOE, the options exchange, or the SEC put out a press release like, hey, you know, we can't have like 50% of the dollar volume or whatever it is of individual stock options going into this one company, driving it up to now over $1.3 trillion. You know, they might not say it in a press release, but at some point that becomes systemic risk, right?
Yeah.
And so I wouldn't be surprised if they actually put out position limits on Tesla call options. Nobody's expecting that. I'm not saying it's likely, but it wouldn't shock me either, because they have to see this as a problem situation developing. I mean, Tesla was up more than one General Motors today. I don't know if I said that earlier, but so, you know, that would kill it. You know, stop the call option buying. This stock will will dive in a hurry, and those people will flip around to put options. But other than that, I think it's just going to expire on just being just way the hell overbought, which brings me back to the beginning of the conversation when I look at the RSI, the relative strength index. I mean, to see that on a stock in the 90s for 3 days in a row is extremely rare. As I said, just looking around, you know, I only saw it in this market in GameStop for 3 days at the time it went insane, and then it collapsed after that. And I even looked back, I even pulled up charts from what I remember, the crazy stuff of the 99-2000 bubble. Qualcomm was one, and Cisco. None of those guys had RSIs at that kind of number. I don't even think for 1 day, much less 3 days in a row. So maybe there were some internet stocks back then that did. I don't know, CMGI or whatever, but they're not around anymore. I can't pull up the charts.
Yeah.
They all were down 99.99999%, and then they were gone. So yeah. And maybe I should try to pull up an Amazon chart, see if that one ever did this.
Yeah, Amazon. I don't know if you got to hear David Einhorn's recent talk with Mike Green. I thought that was really interesting how he almost put Amazon as the sort of poster child that everyone now compares, you know, whatever stock they're now buying to in the hopes that it can grow.
I know David
into.
a little bit. Yeah, David's a terrific guy. And in fact, he's invited me to speak at conferences before. Of course, you know, Amazon was a 1 in 50,000 stock, and everybody thinks that their stock is the next Amazon, right? I mean, it's, you know, it's like it's what do they call it? It's survivor bias, right? I mean, 49,000 other internet companies that never even got public are long gone, right? I mean, Bezos is a brilliant guy. Bezos is a 1 in 50,000 CEOs, right? I mean, he's very smart, and he's an absolute and total shark. I mean, he's a shark. But by the way, I mean that as a compliment. As far as I know, he's not Musk. I mean, he's not a securities fraudster. He's not a sleazebag. He's not a pathological liar. He's just a shark, which is fine with me. That's what business is all about, right? And that's Jeff. That's Bezos. You know, I shouldn't say Jeff. I never met the guy. I've seen him speak. I saw him speak in person a few years ago, and I was really impressed with the guy, much more than I had ever been. You know, I had never seen him speak at length, and yeah, I can't compliment him enough in terms of his business sense, you know, and the company that he built here. He's the anti-Musk. Musk is just a stock promoter and whatever. So.
Okay, yeah, I guess final 20 minutes, I really do want to get into gold and silver, precious metals, which is where you are very optimistic right now in terms of them being benefited by, you know, the Fed continuing to suppress rates while inflation continues to run out of control. And I think you, in the last interview that you did, I heard you say that you think gold is going to be kind of the final bubble, in a sense, of just everyone finally realizing that, you know, they need to just put their money in something that's held its value for thousands of years. Yeah, I guess, how do you see that transition happening from where we are right now of the exact opposite of chasing just these tokens online to actually going after something of value?
Right. Well, and first, let me say I'm not one of these lifetime gold bugs. I never owned gold in my life before, I think, last year. I think it was the first time I ever bought it. And I'm also not a gold conspiracy theorist. Oh, the bullion banks are doing this and that. I mean, I'm sure hedge funds push it around when volume is light. Nobody cares about it. But, you know, I'll be suspicious of the quote unquote bullion banks, you know, when your Uncle Fred at the Thanksgiving dinner table says, I'm loading up on gold, baby, I got to own gold, instead of saying I'm loading up on Tesla or Bitcoin or whatever the hell else he's buying. And if he's doing that and it's still not moving, then I'll be like, okay, it's being suppressed. But right now, nobody cares about gold, right? And so it's easy to push around, you know? So to your point, look, I don't know the timing. I mean, I thought it would have happened already. I mean, gold recently is acting okay. It's kind of creeping up a little bit, sort of higher lows on a weekly chart. But, you know, right now, as I said, most people don't have big inflation expectations going out beyond a year or so. When your Uncle Fred at Thanksgiving says, man, not only is this inflation bad, but I'm really scared about it for the next 5 years, that's when gold is going to really start flying, I think. And yeah, eventually gold will get ahead of itself too. I mean, look, I don't know what the rate of inflation is going to be. I'm not expecting Weimar Germany style hyperinflation, but you know, let's say I have no idea. Let's say inflation is going to be 8% a year for the next 15 years. I mean, to pull a terrible number, but not a hyperinflation number, right? Well, at some point, gold is at fair value, right? Maybe fair value for that is 3.5 times its current price, or 4 times, whatever it is. I haven't done the math, but it isn't 10 times its current price, and it'll probably go to 10 times its current price because it'll be everything gets overbought. I mean, look at gold and look at when it made its historic run in the 70s into 1980, when it went from the low hundreds per ounce to $800 or something like that, maybe over 800 at the peak, right? And then it had a hell of a run. When they first started QE, right? It ran up to, I could pull up the chart, but I don't know, 1800 or something then it had been like the 300s or something like that. I don't know. I'd have to look, yeah. But, it gets ahead of inflation at some point. But right now, I think it's really behind, where inflation is headed. So I don't know the timing. I own a lot. I trade around it a little bit. I mean, if it looks as if it's breaking down, then I'll take some off, I mean, the thing about gold, like normally I'm a value investor, okay? If I look at GM and I study that company really well, and I'm saying, okay, I'm buying GM here at 8 times earnings, and if GM goes down 15% and there's no reason for it, I'll buy more. But with something like gold, there's such a large emotional component to it, and it trades so technically, that's the kind of thing. If it looks as if it's breaking down, I'll take some off the table, and then I'll put it back on the other way. So not always, but sometimes. So so that's how I'm positioned: short, bubble stocks and long gold. And I thought, so here's what I was going to say. So a couple guys were speculating on Twitter today, including a friend of mine, a guy who runs hedge fund telemetry. If you've ever seen that newsletter, Tommy, that he's pretty sure, he thinks that Powell's not going to get reappointed, and he thinks that he might announce that this week. Well, Wednesday when he does his press conference in the Fed decision. If Powell announces Wednesday that he's not getting reappointed, I think gold is just going to fly, because anybody that the Democrats, I mean, look, Powell is the most egregious money printer I've ever seen, even worse than Bernanke for not having tapered this thing a year ago and stopped printing. But that said, anybody who'd replace him, that would be, acceptable to Elizabeth Warren, who basically tells Biden what to do in this department. I mean, Biden is obviously now a captive of the left wing of his party, despite having run as a moderate. Anybody who with whom they replace Powell is going to be like even more dovish and even more of a money printer. So frankly, I'd be fine with that. I mean, my gold position is my biggest position, and I think it would absolutely fly. And I don't know if it would happen on that day, but pretty soon after, I think people would start being terrified. Inflation expectations would soar, and those high PE stocks would finally start getting hit. So,
yeah, that'll be curious. I'll be curious to see if Powell does get renominated. I did think he would probably have it in the bag, but I guess maybe not. We'll have to see.
The thing is, Yellen clearly wants him there. I mean, Yellen is relatively moderate, probably actually Yellen is less of a money printer than Powell, I think. I mean, Powell just lost his nerve and became a coward and whatever. But anyway, she wants him there, but clearly, Warren said she's against him. She's opposing him. And, Biden, who's getting older and older and more passive and more feeble, he seems to be, at the mercy of people such as Warren when it comes to these things. And, he literally has nominated a commie to be, what's that position? Like, is it controller of the currency or something like that? This woman who grew up in the Soviet Union and said she misses the Soviet Union. Now she's a professor somewhere. I forget her name, but she's like the worst. Fortunately, I think she's not going to get through Congress. I mean, because she's that egregiously bad. But because someone in his party, in Biden's party, said, "Hey, we should nominate this commie." Some left winger said this, and so he did it. So that's probably what's going to happen with the equivalent of the Powell replacement. Obviously, has to be somebody who gets through the Senate. But the names they're talking about, I don't know, Brainard or some of these others, they're all even more dovish than Powell. So, that would be great for gold.
Okay. Yeah, I'll be curious to see what happens with regards to that. Are you just playing with ETFs at this point, or miners?
Oh yes, I should say, right. So I own GLD.
Okay.
I'm not, you got to own physicals. Oh, it's a fraud. No, it's audited. There's a bunch of major league banks there. I mean, if society gets so horrible that you can't access your GLD, I don't even want to live in that society. I don't. Where do you live? Are you in Utah or something?
Montana.
Montana, right?
Yeah.
Okay, so yeah, so you probably got a bunch of guns. You're good to go. But I'm here in Manhattan. Can't own a gun here, and bullets are going to probably be a lot more useful than gold flakes. If society gets so bad that you can't sell your GLD ETF.
Yeah, this is definitely off topic of gold, but where do you see New York City going in the near-term future? Do you think it gets a little worse before it gets better, or
Well, that's a great question. So one good thing is the guy who's going to win mayor tomorrow, Eric Adams, is, even though he's a Democrat, somehow we got a moderate Democrat here. He's an ex-cop. He's saying all the right things. Everyone else, every other politician in this town is like an extreme socialist. And Adams is like, wait a second, rich people pay the damn taxes. We got to keep them around here, and we can't have this kind of crime going on. I mean, de Blasio is just the worst. So Adams seems good. So from that standpoint, I think he's good. But the other thing is, like, New York City real estate, residential real estate, it completely follows the stock market. I mean, everyone here either owns a ton of stocks or works in financial services in some way or some form or connected. And so when the stock market's flying, apartments are great. If the stock market crashes and it stays crashed for a while, apartment prices here will plunge. I mean, we've never had here the kind of correction we should have had, that we used to get, every 7-8 years. In the 70s, 80s, 90s, you get these corrections. We just haven't had it. So we're due for a big one. And, when we would get them back then, apartment prices would be down 30, 40, 50%, and so we'll see. I would not buy real estate in New York City right now. Eventually, New York will come back. It always does. And real estate is a hard asset, which is good to have in an inflationary time. But I don't think this is the time.
Okay.
And I could be wrong. Anybody out there watching this, listen, I've been wrong about Tesla for like 7 years. So I'm giving you what I think are what rational opinions in an irrational market. So I can't tell you how long the irrationality will continue for any of this stuff.
Yeah, I mean, it is really ultimately a question of when it happens, not if it happens. I mean, with something like Tesla or real estate or just everything bubble that is currently going on.
Correct. And in the meantime, you can lose a lot of money being short that stuff, right? And so, I mean, as I have on Tesla, fortunately, not really other stuff, but yeah, that's what I think is happening. I think it's going to happen sooner rather than later, but again, I could be wrong.
Okay, so you almost, I guess it's really hard to put a time frame on anything like that in terms of when does inflation finally get out of people's, when does it get past their expectations and then they start reassessing the valuations of everything out there.
Right. Well, a lot of people think it's transitory because, it's just immediate near-term supply chain stuff. But it goes beyond that. I mean, the Democrats are doing their best to destroy the fossil fuel industry and jack up the price of any kind of energy. That's a key component. It's not just, it's not just gasoline for your car, electricity generation, whatever. And that's a big core inflationary problem, right? And then, they want to give away as much free money as possible. And, that's inflationary because it puts money in people's pockets to spend. And, it sort of discourages people from working, which means the labor force is smaller, which drives up the cost of labor. And then they want to bring, which, by the way, this is not a bad idea, and it's not just them, it's, Republicans too, want to sort of bring the supply chain out of China for strategic reasons. Well, the supply chain is in China for a reason. It's really cheap to make stuff there, right? So, you start moving that out of China and you're taking away a lot of optionality. So yeah, I guess you can move it whatever to Vietnam and bring some of it back here, but whatever you're doing, it's more expensive by definition. Otherwise it would be in those places already. So there are a lot of what's like sort of secular inflationary things going on here beyond just very near term shortage of truck drivers or whatever. And so that's why I think inflation is going to be embedded here for a long time.
Yeah, honestly, I'm surprised with how long investors have believed the transitory inflation argument. I thought it would have come sooner, but I guess nothing really surprises me in the market these days.
Exactly. And you're a young guy. I mean, I don't know,
Yeah.
you're too young. You weren't even around probably in 99, right? You were a little kid then.
Yeah.
But I mean, 99 was crazy, but as I said, Procter and Gamble wasn't crazy priced in 99. It was a sector of the market, and now it's just everything is expensive. Not everything has a PE like Tesla for sure, but everything's got a PE way higher than it should be. Except, as I said, I think the auto companies are cheap, not just GM and Volkswagen. I mean, I've never owned a Korean stock, but Hyundai looks pretty cheap, and they have really good cutting edge EVs now. Even Stellantis is not bad either, right? Ford's a little pricier, but they're okay. And Ford has a great EV out now, which is that Mach-E, and then the electric pickup, the Lightning, comes out next year in 2022. It's going to be a fantastic truck. So, the autos are like the last cheap sector, that I can see around, and that's because they've been abandoned in favor of these electric car pure plays, which is just nonsense.
Well, yeah, in closing, Mark, where can people find you if they want to, hear more of your thoughts? I know you're on Twitter at Stanphyl Capital.
I'm on Twitter a lot. I just vent all day long on Twitter. And so my Twitter handle is at Stanphyl Cap. That's my fund is called Stanphyl Capital. Yeah, you can follow me there on Twitter. A lot of it is finance stuff. Some of it is political stuff. And a lot of it is jokes. And a lot of it is jokes about finance stuff and jokes about political stuff. So I have fun with Twitter. I mean, I work from a home office, and basically all day I'm here alone except for this guy.
Oh, wow. Yeah.
I have him on my lap here so he won't bark. This is actually a real dog, not a stuffed animal. So Twitter's a great outlet for me. I enjoy it.
Well, thank you, Mark Spiegel, for coming on. I've really enjoyed getting to hear your thoughts about everything in the markets, especially having to do with Tesla and pretty much every other sort of insane area that we're seeing right now. I would say that you're a voice of reason in the midst of a lot of other voices out there who aren't really speaking in terms of historical context of the markets and investing. So thank you for coming on today. It's been a pleasure to get to meet you and talk with you.
My pleasure. Thank you for inviting me. I really appreciate that.